is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting for Larry Pesavento. My engineer wants me to say, looking good, Billy Ray, feeling good, Lewis. For Larry, Larry will be back next week, and my pleasure to be sitting in. Now, let's look at the numbers here. The crude oil, let me just quickly do this for 1 second. Let me set that up. Okay, here we go. So the E-mini, ESM 17 on the 10-minute chart has just gone to a leg D. What do we look for in the Chapman wave methodology? We're always looking for from the lowest, most identifiable bar. Let me show you this. From the lowest, most identifiable bar, we're looking for, excuse me, let me take a drink. Water did the job. Of 4 higher peaks. At the 4th highest peak, and we alphabetize them, uppercase letters on the way up, A, B, C, D. It can go to a G, but D is where other things can happen. And what we're really looking for here is at that 4th level, what is happening? Can it recycle higher? Is that where you get a deeper correction? So yeah, we are. We're still climbing higher in the E-mini. After being down 6 points earlier in the morning, very early this morning, we are now up 50 cents, and that's a pretty good comeback. If I'm looking at gold, I'm a little behind, but still, let me just put that in right here. We're looking at 10-minute charts, just to give you some sense of what's going on early this morning. There's your leg C in the gold contract, having gone from 12.27 back at about 8 o'clock this morning, now at 12.31. Did I do crude oil? I'm not sure. Crude oil has had, since 4:45 this morning, you've had a peak A, B, C, D, E pull back, an A, B, C, D pull back. This is a 10-minute chart. A, B, C, D again, so that's 2 Ds. We went to 1 E. And now we're in a leg D. All it needs to do is go above 48.01, starts an E. This is where other things can happen, so we're going to be watching this very closely. Couple of things I need to do here is just to, I want to show you the E-mini chart. Let me squeeze that, move it away. There it goes. So the high that was made on the 1st of March at 23.97.25, there was that peak D. It comes back down sharply to the 23.17.75 level, right about the 27th of April. Bounces quite sharply about 23.71, comes back down and retests successfully, not taking out the 23.17 level, gets to 23.22, I think, yep, 23.22.75 on the 17th of April. Has a very strong move to the upside, goes to an E/C, and now we're waiting to see what happens. Why? Because the MACD, the moving average convergence divergence, you see how it gave such a fantastic signal way back there. That was the crossover negatively on the 7th of March. The stochastic was already pulling down. That's the MACD, the moving average convergence divergence. MACD is one of the techniques. If any platform that you have will certainly have the MACD, and it's all already configured. You can just add it to your chart. And the slow stochastic is what I like to look at. 14.3, 3.1, 20%, and 80% of the levels I look at. And this one looked like it was almost about to break under the 80% level, and today's going to be critical for that. So, and what happened is that the rally from the 17th of April went to a high of 24.0375 a week ago. Was that after the Sunday evening? That was the pickup that took it over the previous high. It went to 2403.75. That carried through into Monday morning, and now what we're looking at is in the weekly chart, and this is something that I think let me go back here. I did this yesterday, I believe, during my show. 11 o'clock till noon is where I do the Target Technicians Hour. Yes, I was showing this. So this is a weekly chart. I brought this up because it is I've raise the level so that you can look at the MACD. See the MACD, the 9-period differential, the faster moving average, is underneath the slow moving average. And that's just, there's a chance that this could deflect lower. It's a weekly chart, so today's close is going to be quite important going into Monday morning. Going to Monday's entire session, because what we want to see, if we're looking for some kind of a pullback, you want to see 23. You want to see it come down, take out the low. This is a weekly chart. The low of 23.79. It needs to do that by next week, and if it just merely breaks above the 24.375 level, that just extends this weekly chart as being positive, because the stochastic is at 82, and that above 80% is a positive. I'm saying that the internals are showing, you see, as it did right here. This was back in September of last year, September, the week of the 16th, all the way through to the week of the October the 7th. Let's call it September the 30th, where the stochastic was pulling back and the MACD was flat, but underneath, just basically underneath, and then it took a leap down. So what we're watching here is the same thing going to happen here. This is what I call a right arm extension in the Chapman wave methodology, and it means that one of the indicators is positive and the other one isn't confirming, but the price is going to a higher high. So let me get out of this and let me give you parameters that we want to look for. I'm going to go through the charts one by one. Now, let's do this. So in terms of the Dow, INDU, this is the Dow right now. It has had 10 weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks to break above 21,169 and still hasn't done that. So if, in fact, what we're looking at is that same MACD giving us a hint that there could be a pullback, another digestive phase in the Dow, but the stochastic didn't go to 80% in the weekly charts, at 75%. You don't really have a confirmation there. So the Dow is weak. Let's just jump right away to the S&P SPX.X. So the S&P at this point has gone to an E/D in the daily. If I take it from this low, it's ABCD. If I take it from the actual low of 23.22 back on the 27th, I think it was, of April, we've gone ABCDE. So there's an alternate count. Both of them are saying, be a little careful here. This is where you can start to see a pullback. Having gone to the new high in the weekly, that is a leg E. But I want to see where we close today, and I want to see where we start out the week Monday. If today there's a reversal, maybe there will be, maybe there won't. But if there's a reversal at 23.94, at this point in the S&P, if there's a close below 23.87-ish, 83, somewhere around there, and this 9-period exponential moving average of 23.92 is pierced again to the downside, except this time we're close to the downside, I have to start saying, you know what, 91% in the stochastic is outstanding. The MACD is turning down, but still very positive. But there is a very strong hint that we are starting to see internal weakness. That's really it. If there's a close in the 24.07 or higher area today, 13 points higher or something, that'll be amazing. I'll be back and we'll continue with this romp through the different sectors. Basil Chapman sitting in for the one and only Larry Pesavanto, and my show is usually the Target Technicians Hour, 11 o'clock till noon every day, every weekday that is. I'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Basil Chapman sitting in for Larry Pesavento. Here's that 10-minute chart, 2-minute chart that we were looking at of the E-mini made a peak D. That's the objective here. Remember what? Let me just do this again. If you just tuned in, Chapman wave objective is always to get you to at least a D, and then other things can happen. Whoops, take that away. So we'll see what happens here. I want to continue with that preamble before the market opens. So we're looking at the S&P. I gave it. Oops. I'm sorry about that. I'm not sure. Okay, coming back. Where's the voice? Got it, I think. All right, well, it doesn't matter. It'll be there. So now let's look at the QQQ. The QQQ has been on a tear. It's at 138.33 right now. The high was 138.63, a peak D. Remember, we're always looking for those Ds. Going to be a very important session here. I've got a couple of indicators saying the upside now is very limited. It can go a little higher, but it's becoming very limited. We're starting to see the chance that the downside will open up by next week. MACD still strong. Stochastic at 96%, really strong. The on-balance volume, this blue line here, is turned down. That's one clue. The very shorter-term moving average above the 9-period moving average, that black line, is hinting that upside is becoming a little limited. Scratch. Here we go. Okay. So that's the Qs. If you go to the NQ, that's the futures, it's the same thing. Go on to an F/D in the Chapman wave methodology, and all the same, everything applies. So let me just use the Qs because most of you are looking at Qs. Those people who actually are working with Larry, use the futures, but I'll just do this because the Qs touched the 9-period exponential moving average yesterday. It went to 137.43, and I believe that the 9-period moving average is at 137.43. Okay, so 137.43 is key. A break under that in the next 2 days will suggest for the first time since the breakout on the 19th of April that the Qs are losing upside momentum and they're beginning to test very important support, and that's that 9-period exponential moving average. A break above 138.63 starts leg E. It's very good action, but it is saying, doesn't matter, we are starting to get quite toppy right in this area. Let's go to the IWM. The IWM has been very weak. It's even now, it's down 40 cents at 137.84. This is the Russell 2000 ETF. It's gone to a left side, right side price time match, and it broke above, and then it started to fall. It's very unusual at an all-time high to go to a C- in the daily. And that says to me, this is a very weak index. The weekly has gone to a peak D. Remember, peak D is where you got to be careful. The MACD, the moving average, convergence, divergence, very poor. The stochastics only at 60%. So this is really struggling. And the monthly chart is in the legs. See, like many of the other indices, all my monthly charts are still very positive. Looking out for 2017, still very positive. Shorter term, I think there's a lot of action going on that suggests we are continuing the 10-week correction in the Dow. The S&P fractionally made a new high, but it's really been in a 10-week correction. It's just the Qs that have been leading us higher. Now, I wanted to do a couple of things here. Gold had a very nice spike to the upside yesterday. I mean, nice, I say, just in the context of having come straight down, really down to a trough D. And the 9-period exponential moving average right here at 1233, that's really strong resistance. The weekly chart, this candle, the candle of last week, this big red candle, that's not good. And it's going to take the MACD not crossing negative, but bouncing to make a second arch, in other words, a lowercase m formation with a right shoulder occurring right now, with gold trying to get above 1239. I mean to say 1239. It's at 1231 right now. It really needs to climb above the 9-period moving average, and that moving average is at 1233. It needs to get to the 1239s, and that'll suggest that there is some little bit of inflation here, because if you look at the bonds, the TLT, the Lehman 20-year T-bond fund, it's up 59 cents. This candle shows the stochastic trying to turn off the 9% level. It's very weak, but it's trying to turn up. The MACD is almost flattening out, and if bonds can go above 121.20, 121.04 is the 9-period moving average, and the trading, the Lehman 20-year T-bond fund is trading at 121.07, up 59 cents. But if you look, let me just do this one more time. Let me go to the bonds themselves, the continuous contract. You see this little plus sign here, this doji candle, very tiny candle, looks like a plus sign from yesterday. And the follow through to the upside today, that's a good sign. My contention, and this is going to be proven by next week, is that if bonds rally, the safety, the harbinger, the safety factor of bonds, if you can call it a safety factor, will kick in as the stock equity side of it becomes a little bit more risk off, risk averse. Money will come out of equities and into bonds. That's what we will be looking at if, in fact, two things happen. One is the Dow, which is still the leader, even though it's only 30 stocks, and people always laugh and say, how can you, for 30 years or whatever it is, every day make a call on the Dow? The Dow is a really important instrument for me. For other people, maybe not. I look at everything else, as you can see, but the Dow kind of is the leader. If you remember in 2000, the Dow, I think it was January the 14th, made its high, all-time high, and then pulled back, and it took until March before the S&P made its high. At bottoms, that Ictus, remember January, Larry Pesavento made those unbelievably outstanding, brilliant call for a low to be made somewhere in that early March period, and March the 6th was the Dow low, and March the 9th was the S&P low in March of 2009. Brilliant, brilliant move. And so the Ictus, the lows, like in August of 2015, lows come together because everybody, the fear factor is so high. And the VIX index, we'll talk about that in a moment, is going to be very important today. It's trading at 10.54, under 11. It's minus 0.06 right now. If it starts to trade at 11.20, 11.40 today or Monday, this market starts to pull back. Overall, it will pull back. Right now, it's showing buying pressure still is extant. Okay, so let me make it simple. Dow INDU, you can just use this if you want. The Dow trading at 20,919, opens in about 5 minutes time. But any time today or Monday, if it trades in the 20,874 area, about 40 points lower, be careful, because that's going to suggest it's going to retest the 20,798 low of yesterday. If, in fact, the Dow trades by 11 o'clock, 11:30 during my show this morning, the Tiger Technicians Hour, if the Dow is trading anywhere in the 20,954, 964 area, and the S&P is up about 6 or 7 points, and the composite index is up about 12 or 14 points, that's going to be good action. Wouldn't be able to deny that. Meantime, back at the ranch, I think that we're going to have a choppy day, and there'll be some weakness, and how the weakness occurs during our 10 o'clock time. As we're wrapping up this particular show, we'll know a lot more. I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone, we're back. Basil Chapman sitting in for Larry Pesavento. 9:30, bing, bing, bing. Has the market open? Yep, the market's open. S&P is down 2.80 at 23.91. The Dow is down 25 at 20,896. The QQQ series, let's do that. Oh, the E-mini. Yeah, let me just do this. Can I get it? Right there. Why is it not clicking on? There it is. QQQ, trading at 138.44, up 14 cents. Oh, this is going to be the real benchmark today. What we're looking at is what is the IWM? IWM is trading down 40 cents at 137.84. That's the Russell 2000. Let's go to what I had shown the other day was the OEX 100. Nobody even talks about it anymore. It made a peak E in the daily chart and a leg E in the weekly chart, and it really is showing weakness in the weekly technicals. So what happens today is going to be very important, and the close. What would be very important if the Dow closes down, say, I'm just saying, what we would look at, if you're bearish, then you really want the Dow and the S&P, and especially the QQQ and the semiconductor index, to close down today and quite sharply off the opening level. You want to really see the Dow at about 23,865, somewhere around there. Right now it's at 23,889, and or lower, and the S&P at about 23,86 or so, and that would signal that if Monday is weak, then all of a sudden your weekly charts are looking at something very different, because instead of closing very strong, and that's a possibility, but instead of closing strong today and then opening kind of okay on Monday, what you've got is the momentum to say, now we're going to see if all of next week there are no new highs. That's the real issue, is that in the Dow and the S&P, there must be no new highs made, because if there are, they're kind of joining the strength of the QQQ. Okay, so now let me go on, and I'm going to give you a little hint of what I'm looking at here. Gold at this particular point is up 6. This 9-period exponential moving average is suggesting that there has to be a leap a little later in the day above that 1234 level. My 120-minute chart, I'll do this live right now. Let me just do this. Now, with Larry, he's got everything automated. That's fantastic. I do not have it automated. I've tried over the years. I might be trying again in a couple of months over the summer. I hope to do quite a lot more. The reason why I don't, and I've not had success automating, is because there are certain things that the human mind and the human eye can take over that the computer could do, but it's extremely cumbersome. And if you get the computer to even think that way, it starts thinking that way all the time, even when it shouldn't. And that's the big issue for me. So there's an alternate count that says it could be an old, say, E or a brand new B. Well, to start doing that whole explanation for the computer, it's just very cumbersome. And then what happens, it opens you up to interpretations where the eye says, what are you thinking? You know, it's I remember at one point when I started trying to do the methodology for identifying the Chapman wave notations, and I had a couple of different people do it for me. One person in particular, I was saying, okay, this is exactly what I want. I'm giving them all the specs. And then as they were doing it as an engineer, and I think I had every right to do it as an engineer and not as a person interpreting what I wanted, they would say, oh, but this is so fascinating. Look, if I do this and I do that, the next thing they were way off track. I mean, so that became very difficult. I wanted it to be absolutely simple. I'm trying to codify it. And here you are. Here's the left side, right side price, time matching gold. It says that if there's a break into the 1234 area, then all of a sudden the left side high of 1236.9 made at 8 o'clock in the morning on the 8th, a couple of days ago, that would be a target, and that would be a target by 22 by tonight. Well, I don't know if there's trading in gold. I think it stops at about 1 o'clock. So that's really what I'd be looking at there. Okay, so now let's get back to our story. And what I want you to do is to say, you can't take anything for granted in this situation. And I'll tell you why. Because within the context of markets, sometimes there are areas of strength that will not let up. for instance, the semiconductor index trading at 82, 89. If you look at AMAT, Applied Materials, it's trading in a leg B in the daily. I don't know how I can count it any other way. Leg E in the weekly, leg C, a straight up move in months, ever since it made its low at 12.25 back in August of 2015. Every single month, it's gone up except for a red candle, 2, 3. There have been 3 red candles. So until the semiconductor index starts to show some kind of weakness, I don't think it's going to really impact the QQQ series as much as it should. So the Q's right now up 13 at 138.40. Now, I did want to do this. I was going to feature it again for my subscribers to my opening call. We don't usually get into commodities and things, of course. Larry's all about that. What I wanted to say is that I had a signal that suggested that sugar should go higher. And there is an ETF, an ETN for sugar. I just decided I wouldn't buy it today. It looked very good 2 days ago. Sugar is acting quite well. It's at 15.81. And one of the reasons why I like sugar is that there was a pattern in the Chapman wave methodology that has a one-to-one, I call it a one-to-one parallel extension. What does that mean? It means that within the context of a peak, and especially if it's a D, E, or even an F, if there is a sharp move down that looks like what we would call a straight line move to the downside, and then there's a bounce, the tradition that you hear so many wonderful analysts here at TFNN talk about, they talk about an ABC, which not in my work, ABC means uppercase A's and ABC and lowercase. It's counting the peaks of the troughs. ABC essentially is looking at a lightning bolt pattern. And it says you come straight down, then you bounce, and then you make an equal move to the downside. Looks like a Z, kind of a lightning bolt. So I call it, in this particular instance, it's very specific. It occurs very seldom. It's something I found a long time ago. Don't use it all that often. Did use it here. I showed it quite some time ago. I said there's a chance that, and I found it when the H pattern was forming, the lowercase h pattern that we use all the time in the Chapman wave methodology, that said if there is a break in this H pattern, we could get a 1-to-1 measurement to the downside in the weekly chart of sugar. This is the continuous contract. Sugar number 11, continuous contract, July. And what it said is that when it got down to the 15s, if it got down to the 15s, be careful because there could be a bounce. Only a bounce is all I'm thinking. I think the monthly chart is saying, nope, sugar's not ready for anything but a bounce. So here we are. We've just made a low a week ago at $15.24 on the 5th. Hit a high yesterday of $15.93 and then pull back intraday, having a nice candle today. $15.84 is the high. Needs to break above $15.94 to continue the move up. I'm just thinking that sugar could bounce. That's all. I wanted to mention it, and it's bouncing because the one-to-one extension was met. I'll be back, and I want to talk a little bit more about why I've got a sell signal on the Dow, why we added another short in the positions on one of the indices today, what I'm really looking for. I'll be back. Basil Chapman sitting for Larry Pesavento. Dow is down 40, S&P is down 4.5. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Folks, we're back, and yeah, we've got, don't forget, coming up, Bull Binary with Tom O'Brien and Tommy O'Brien, and I'm not sure if Daryl will be joining them, and Tom gives a great wrap-up of the market, not wrap-up, a wrap-in, at 10 o'clock, summation of where we are and what's going on, what he's expecting. Tommy Jr. did a great one this morning. He had to actually add a little bit because his computer froze up, but normally he's just right there. He's giving you all the information in 3 minutes. That's incredible. 3 minutes just wraps up what's the pertinent points of the day. They spoke about the VIX this morning, and yep, the VIX is now up 7 at 10.67. This is going to be a fascinating day. I'll talk about that in a moment. I just wanted to say, within the context of my own work, my Traders Corner, and my Target Ignitions Hour is my 11 o'clock to noon show every day, call-in show, just like this is. But I also have the opening call, which is my daily news, very comprehensive newsletter. Spent a lot of time on it. I discussed everything, what we're looking for here. Basically, I sum up everything, and I said, if there's minus 40s or more at 10 past 10 this morning, the chances for a weak close and a weekly candle will form. I talk about what we're looking for, why we're looking for it, in my 120-minute chart, which is somewhere over here, right there. 120-minute chart, I showed there was a Chapman Wave 5 conclusion. I'm not 100% sure yet of the wave count in terms of the Chapman Wave 5. It's a technique that I've been developing over the last 2 years. But I did mention what we're looking for and why we're looking for it. And if there was a move halfway into this candle, you can expect lower lows intraday, and that the gain that was made intraday yesterday is often given back the next day if it's just an emotional rally, which it was towards the end of the day, coming back from 120 in the Dow to just close, what was it, minus 34 or something. Usually you're going to have to give back something. So we're watching this real closely. Now, what I wanted to show you is just within the context of what I do. So here's the arch formation, and this is a 2-minute chart. It went from a low bar with the MACD and stochastic rising, and then it went to peak A. That's the first peak. Peak B, the second peak. 3 is the third peak. Peak C, alphabetically, uppercase. And then it went to a D. And that D, I put the down arrow when we were actually just over there. And then I got the confirmation of the MACD and the slow stochastic fading. Then I do what's called using a plumb line. That is the midpoint. I did something that said there could be a pullback that takes an equal number of, you know how people say it's the what is it, elevator going up and the, I don't know what it is, free fall coming down. That's only true at certain time. Most of the time, you have almost the same number of bars going up to the same number of bars going down. It's only in a crash mode, and that crash mode could be a 2-minute chart or a monthly chart. It's in that very sharp, the power move to the downside that other things can happen. But most of the time, look what happened. It went, the low at 834 was 2385.75. The high was 2391.50. And then it comes down almost an equal amount of bars. It comes to the downside and it goes to 2386.50, just a tad higher. Now it's bouncing off this green. Look how important this 200-period exponential moving average is, this green line. That's going to be important. And you've got the 10 o'clock news coming out, whatever that is, that could be a boost. So the left side, right side price time match would have said at 9:46, there should be a move that tests the low of 2387. Instead, it went to 2386.50. Now there's a bounce. Now what I normally do is I say, okay, so it came in earlier. Now we can have another arch formation. Let's see if that's going to be a new buy signal for the 2-minute chart. Remember, I'm only talking 2-minute chart. You've got to know the time frame you're talking about because that's what you want to deal with. And that says if there is another price upside price rally, then you've got to be expecting, if certain levels are pierced, that there could be a move to the 2391.50 level, and that could take you there by 8 minutes past 10. So that's the way I like to look at things. What's going right, what's going wrong, and we'll continue now with some of the other things. Let me just get that off. Back to quiet. There it is. Okay. So now what I'm looking at is, within the context of the markets, I have to talk about the VIX index, the volatility index. That volatility index right now is at 10.48. It's down 12 cents. It's gone from a peak E at 16.29 on the 17th of April down to the low that was made 4 days ago of 9.56. What is 9.56? Well, you want to know what it is? Within the context of 2 decades, we've only been down at this 950s area twice. The last one was at on the December, I believe, of 2006. Yep, there it is at 9.39. And before that, it was back in 1993. I believe it was November. Keep going, scrolling across. There it is, 9.31 in November of 1991. And then it screamed higher. I'm not sure that we have market conditions that suggest it should scream higher, but what I am suggesting to subscribers is that we've got to be a little bit careful here, because there are signs that say, within the context of the volatility index, that the low that was just made, if it's taken out, we've got to consider that something else is going on. But if we just look at it as a traditional measure of buying pressure and selling pressure, what happens next is going to be very important. If the VIX index anytime next week starts to climb, and it climbs above the high of yesterday of 11.23, that says, okay, be a little careful. If it closes for 2 consecutive days above 11.80, that's going to suggest that the short-term trend is starting to change in the best indices. That's really what I think. That's my interpretation. And all I can say is that you've got moving averages way up at the 13 area. If at any point in the next 2 weeks the VIX starts to climb into the 13s, the consolidation will continue, and it will include, I'm almost sure it will include the NASDAQ 100, the NDX 100. So those are the parameters I'm looking at. If it starts to fade, and by the end of the day you're looking at the VIX instead of at 10.47, it's at 10.20 or goes back to the 9s, that's just going to continue the buying pressure. And that's the reason why we can look at something that's been very weak. And GE is really my bellwether for the Dow. It has been for decades. GE is down. Whoa. GE is down 53 cents right now. It's actually a green candle because this morning it hit, I don't know what the news is, 28.31. This is usually a benchmark, not for the general trend, but for the Dow on the very short-term basis. And that's just suggesting that GE, even though it's not in an area that's of importance right now. They're always going into the wrong thing at the wrong time. They went to the whole financial sector when it shouldn't have. They've gone into the oil sector heavily over the last couple of years. So they tend to do the wrong thing. Big company, but it does give me, it's my shorter term bellwether. And it is suggesting that the general market should in fact be affected. And 28.19 was the low back in October. I think it was October, the week of November the 4th, 28.19. And today's low is 28.31. We're almost there. There's the break. We'll be back for a very brief segment when I get back. Dow's down 29, S&P's 313. Let's look at our 10-minute chart as we go to the break. 10-minute chart. Okay, we're at 23.88, down 250 in the E-mini, S&P E-mini. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I just want to do this real quickly because I know some of you have it, but for about a week now, I've been looking, maybe 5 days, the whole week. I've been looking at Bitcoin. GBTC is the symbol. I featured it for my subscribers because a number of subscribers said, "Oh, we actually have bought it." Callers as well, emails as well during my show, and I said in my work there was a leg F that was being formed, and that's the 6th highest peak. That's where you got to be really careful if the technicals are not confirming. And the question was, I bought it. Most of the questions were, I bought it earlier. What should I be doing? And I said, Raise your stop, get out of most of it, keep a little bit if you want to as a core position, that's fine, but get out, take your huge profits, get out of it, because it's a leg F in the daily, a leg E in the weekly, and a leg D in the monthly. And I gave the whole scenario of why I think it's about to turn and come down to the 9-period moving average was at 192. Yes, this is what I showed subscribers. This is reality. Today, it has just dropped 24 points. It's 190, went down to 185 area. There's that peak F top with a down arrow, meaning this is very serious. There could be a bounce now, but I think you've made your top, at least for now, at 265 round number on the 10th of May. Here's your leg E in the weekly. And look, for those who are buying at the top, near 260 something, it's 70 points down. I mean, that is a huge decline. So be careful. I think right here, most of the damage is done kind of on the day, from the high, that is, not on the day, but from the high. And it could bounce a little bit. I'm not sure about the 120-minute chart. That it made a peak D. Yep, there it is. There's your D. What do we always talk about? Ds. And that's like a 1-to-1. That's that lightning bolt pattern. It stopped right at the, I think that was the 50-period. Yep, that's a 50-period exponential moving average right there, that dashed line. Be careful. You'll have an opportunity. I think 300 is in the cards later this year, maybe this summer. But right now, dangerous, dangerous, dangerous. It goes up as quickly as it comes down. Bitcoin, GBTC, trading at 194. Be real careful, folks. You want to stay tuned for my show at 11 o'clock. I'd love to have you. Check out my Tiger Technicians Hour, and check out my opening call newsletter at TFNN. I'll be back on Monday. I'll be back on my show at 11 o'clock. Have a great day. Stay tuned for Tom and Tommy.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.